Welcome to RBC's Markets in Motion podcast, recorded October 2nd, 2024. I'm Lori Calvasina, head of U.S. Equity Strategy at RBC Capital Markets. Please listen to the end of this podcast for important disclaimers. Today in the podcast, we put the spotlight on the U.S. election, focusing on the results of a survey we conducted in late September of our global equity analysts on how potential outcomes of the event may impact the performance outlook for their industries. We asked our analysts to assess three things for us: the relevancy of the U.S. elections to the industry they cover, the potential implications of various outcomes for the outlook of the industries they cover, and what specific policies are in focus them as they considered their answers. Three big things you need to know. First, our survey results, which are bottom-up in nature and driven by domestic policy views, imply that the event is relevant to U.S. equity markets, but perhaps less so than some market participants may believe. For our U.S. analysts, a Republican sweep was seen as the most bullish outcome, while a Democratic sweep was seen as the most bearish outcome. But the key thing to note is that the tilts were extremely mild. Second, some of the traditional Trump trades continue to emerge in policy assessments and sector views. Among our U.S. analysts, energy and financials had some of the most bullish tilts in a Republican sweep scenario, and some of the most bearish tilts in a Democratic sweep scenario. Third, in terms of our own broader market call, we viewed the elections as creating near-term uncertainty in the U.S. equity market and the potential for some short-term choppiness. But the survey results add to our growing belief that the thing that may matter most for U.S. equities, for 2024 at least, is getting past the event so companies and investors know what they're dealing with. If you'd like to hear more, here's another 5 minutes. Now let's jump into the details. Starting with takeaway number one, our survey results, which are bottom-up in nature and driven by domestic policy views, imply that the event is relevant to U.S. equity markets, but perhaps less so than some participants may believe. Globally, 51% of our team said the event is relevant, but most of those said the event was relevant as opposed to highly relevant. The event is seen as most relevant in the U.S. and least relevant in Australia among our coverage regions, with a neutral view on relevancy in Canada and Europe. Even in the U.S. itself, the relevancy score was rather weak, coming in at 0.7, an average score. On our scoring system, +2 is very relevant, +1 is relevant, 0 is neutral, -1 is irrelevant, and -2 is very irrelevant. On our scenario analysis, we think the key thing to focus on is the views of our U.S. analysts. They have a slightly bullish bias in a Republican sweep or Trump win split Congress scenario, though it's worth noting that once again the tilts were very modest, coming in at 0.38 for the Republican sweep and 0.22 in a Trump win split Congress scenario. In our scoring system, +2 is very bullish, +1 is bullish, 0 is neutral, -1 is bearish, and -2 is very bearish. Overall, our U.S. analysts were less constructive under the two Harris win scenarios than they were under the two Trump win scenarios. But the signals were once again mild. In a Democratic sweep scenario, the overall outlook implications score came in at -0.24. In a Harris win split Congress scenario, the overall outlook implications score came in at -0.04, right at neutral. Moving on to takeaway number two, some of the traditional Trump trades continue to emerge in policy assessments at the sector level. Within the Republican sweep scenario, sector tilts on the outlook implication scores were most bullish for energy and financials. Within the Trump win split Congress scenario, these two sectors also had the most constructive tilts, along with utilities. Within the Democratic sweep scenario, sector tilts on outlook implications were most bearish for energy and financials. Within the Harris win split Congress scenario, most outlook implication scores at the sector level came in at neutral. When we asked our analysts about what policies they were focused on, regulation, corporate taxes, tariffs and trade, and the Inflation Reduction Act and other fiscal stimulus packages were the most popular topics, along with energy, climate, and EVs. Our conversations with our analysts on policy did remind us that there are a number of distinct issues in focus for the investment community in this election, with complex and sometimes conflicting crosscurrents. Wrapping up with takeaway number three, we viewed the elections as creating near-term uncertainty in the U.S. equity market and the potential for some short-term choppiness. That's still generally how we're thinking about things today, but the survey results do add to our growing belief that the thing that may matter most for U.S. equities for 2024 at least is just getting past the event so companies and investors know what they're dealing with. We've been highlighting in our recent meetings how the U.S. equity market tends to pull back a bit right before Election Day and rally back afterwards. Longer term, we've also been reminding investors that the U.S. equity market tends to rise regardless of the balance of power in Washington, with the two best scenarios over time actually having been when Republicans control everything and Democratic president with a split Congress. As for today, we've been highlighting recently how S&P 500 performance does appear to be decoupling from Trump's odds in the betting markets. The two were moving in sync throughout 2024, but that did change recently. And as noted on our survey, while the U.S. scenario analysis has some tilts at the broader market level, those tilts are pretty mild, and relevancy for the broader market in the U.S. is also milder than we expected. Discussing policy views with our analysts also reinforces to us that it's simply very difficult for stock market participants to accurately assess potential impacts for a lot of the policy ideas that are being discussed right now, at least until the legislative process plays out and important details are determined. Waiting and seeing is often hard for equity investors, but we think that's good advice right now. That's all for now. Thanks for listening, and be sure to reach out to your RBC representative with any questions.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.